Hey, welcome back to Two Super Guys Trade Stocks. I am Dylan.
And I'm Vinny.
And are we in a bull market, a bear market? No one has an idea. Burry came out and was like, "Hey, we were wrong. Shouldn't have sold." Said sold. I came out and I told you I'm going to start buying stocks, but I'm taking other looks here and I'm looking at some other stuff happening, and I truly don't think that this is a bull market. I'm going to show you why, but it's more that it's a decision point. So let's take a look.
Two stupid guys trade stocks.
So it's not that I'm saying bull or bear. It's that when you look at where we're at on the SPY and the Qs, and I'm going to take you through 20 years. It's actually kind of cool to see. I know. It's pretty interesting to actually see what's happening because we've put ourselves, the Qs and the SPY, in a tightening channel, and something's got to give one way or the other. All right. First,
Tighter than a tiger.
tighter. Okay, that's a good joke. What did you think about the jobs report?
So, I mean, you're definitely seeing that the kind of Powell is having the effect that he was hoping to have. He did talk about thought unemployment was going to go up like 1% over year. That the ratio of kind of jobs available to workers available was way too high at almost 2. It's kind of contracted down. It was 1.6 or something like that, the most recent one. So they're having effects on tightening economic conditions, and they are hoping to continue to cool inflation vis-a-vis that methodology.
Yeah, those stats are from CNBC. Basically, it was like 2,000 off of what they predicted, and then they predicted a 3.6 unemployment rate. We're at 3.5. It's like right where they were saying. Okay, it's very close. This is pretty interesting, though. This is from Bloomberg. There is still, even after all this is happening, even though unemployment has gone up slightly over the last couple months, there's still 1.67 vacancies for each person. It's kind of odd because we haven't had that much sustained in quite a long time. It just kind of reiterates, sure, unemployment's going a little bit higher, but there's still more jobs than there are people, and there's a labor shortage that is not really being factored in. This is like kind of the opposite way of reading this, but I mean, basically, number of unemployed persons per job opening, and we're chilling at about 0.6 to each job, but it has a longer graph, right?
Yeah.
All right. So there's something I want to show you guys. I talked about this a little bit last week. I looked at like 4 stocks. I kind of zoomed out, and then Bloomberg posted a graph, and I was like, oh man, this is way worse than I was thinking. Here's the top 24 stocks in the SPY. All right. Okay. By weight. I should clarify, by weight. All right. Not performance. Okay. Obviously, there's some familiar names at the top. If you look at for 3 months, we're the beginning of April. For the first quarter, technology and communication services are up 21% plus. Perfect. Obviously, there's some notable stocks in those categories. Yeah. But let's look at this from a market cap perspective. Are you ready for this?
Okay, yeah.
The top 20 largest stocks in the SPY have made up 1.98 trillion in market cap gain. The rest of the 480 stocks have made 170 billion in the market gain. That's insane. It's literally being driven by 20 stocks.
It's interesting.
It's just crazy. It doesn't make any sense. And honestly, if you make that 20 into like 8, it's still terrifying because it's like 8 huge ones and then like 12 medium ones.
Well, people have talked about this from like a kind of a longer term perspective of the dumb money index fund investing and the index bubble, if you will, because these companies, it's market cap weighted for the S&P 500. Everyone's kind of figured out that S&P 500 low-cost index funds are the way to do your retirement savings, right? Pay that 0.05% management fee rather than like a significant 2-3% fee. But you're going to continue to see the valuations go up on the winners, right? You're going to continue to see this outperformance of the big companies probably because of that. The dumb money is going to keep buying in the market weighting. and it's going to continue to push these stocks up.
I honestly, it's getting to be so one-sided. It doesn't make any sense. But now here's the flip side to that, right? Now let's say that your Google, your Apple, your Meta, your Tesla. I mean, that's 13%. That's 12% right there, right? Let's say they just chop. Now, the rest of the stocks could catch up, and now you have the other 480 stocks that have just been chopping and or losing actually make up, and the spike can go even higher. That is definitely an option, all right? Here's what I want to show you. This was pretty cool. So this is the Qs, all right? This blue line is, can you see my, there we go. This is the 200 moving average, and this gray dashed is the 100, all right?
Okay.
Now, this is dashed because the Qs started in like 1999 or something. So there's not a lot of data here because you need 200 days to go off of. So the beginning of this is not super accurate because there's just not enough weighted days. But as you go through, now it starts to get accurate. So we're above the 200. You're going to notice that the 100 always acts as the first support, and the 200 is your backup support. When it loses it, it usually dips for quite a time until it reclaims the 100. So, right, support, lost it, we kind of died for a long time, we reclaim the 100, and we don't go back below it. All right? That's important because I'm going to show you some crazy stuff here.
Yeah. I'm looking to see where this is going.
So you can see 100, great support. We go down, it bounces right off of it. This is obviously a weekly. We're already ahead 12 years. It's not like a perfect indicator, right? It's never going to be like to the penny every time. Like you have this insane week in 2015 August. Wow. But then, it hits to the penny there. Support. We reclaim it. We go back up. We're in 2017 now, 2018 now. We dip below it once again, shoot back up. Oh my gosh, we're so strong. Now COVID happened. Now, imagine if you were watching this chart when COVID happened and I did not think to do this, right? But you could have just put limit orders near above the 200 moving average on the Qs and just made a fuck ton.
Yeah, we were all scared we were going to be living in our basement in a cave for the next 6 years.
Yeah. We did not take Buffett's advice. And then you can see we lose the 100, but we bounce off the 200, and we haven't lost the 200. We keep on going. We keep on hovering around it, but we haven't reclaimed the 100. We're coming into it's either an ascending or a descending triangle. We're going to know as soon as we pick the right direction. But you can see it's pretty odd because the 100 and the 200 both have different slopes, and they're closing in. The SPA,
so it's
right?
Like a tightening wedge is what you're kind of arguing.
We're forming a wedge pattern with the 200 on, the low side and the 100 on the high side. So this is the same thing. It's a little bit more zoomed out. You can see when we do lose the 100 and the 200, as soon as we reclaim it, we don't ever go back for quite a long time. This has been true for 22 years. There is a couple fake outs, but you can see how beautiful these supports are, right? It's just wild. So we lost it. It's not a perfect bounce, but it's within $2. It's pretty good. And then we just don't reclaim it again. Let me keep going. And then look at that. See? We finally break through it, and then it becomes a floor. It's beautiful.
Okay. So we need to lose the 200 and then regain the 100, then we buy calls again. All right, I got it. I got the game plan down.
Pretty much. Now imagine, it's really I hate when fucking people do this. And they're like, well, you just look at the hold on thing. Imagine being in the middle right here. You don't know what's happening. This is trash, right?
Yeah.
Whenever people show indicators that they're their favorite, they're like, yeah, this is the best one. They just skip over this. In real time, you have no idea what's happening right here. It's easy to say, hindsight.
Yeah, exactly.
So again, almost there. We're in 2013. Now we're in 2016. Same thing. We lost it, but the 200 kept us up. 2017, 2018. Man, what a great year. Now,
Stocks
here's
will only
your.
go up, buddy.
I know. Keep going.
That's
When we lose
COVID.
100 and then we regain it, it always stays bullish for a year, right? So then we lose it. We have a fake out. We go down and we've bounced off of it almost perfectly again. And we're approaching it again. Once again, we have a wedge pattern that's forming.
Oh God.
I don't know what's going to happen.
Yeah, I don't know either. I mean, I definitely still have a bearish bias. I'm not gonna lie.
You do.
But I don't know how much of that is my own kind of bias, right? Like how much of that am I carrying into this versus like how much of that is my truly like listening to indicators in the market and understanding what they're trying to say.
Yeah, it's really hard to take yourself out of it, right? Because I mean, I don't think I'm going to get my money back on these shorts. I'm just already written out off. I mean, I do have other things that are a whole year and a half out still, but logically, it doesn't make sense that we're this high. I do think it's realistic that we could chop for a while, but at some point we have to break out of that channel and it's going to be either down or up. I would assume it's going to be down, but I can't be sure.
Yeah.
It is pretty weird, but if you look at the last 20 years, when we've lost the 100 moving average and then we regain it, we have a bull market every time. It's kind of weird.
So we regain the 100 moving average. We got to buy calls. All right.
Essentially.
What's interesting, back to the previous topic. So this year, I'm outperforming the SPY by about 10%. But that's because my biggest holdings are Apple, Google, Meta, Baba. With the exception of Baba.
3 of those are 10% of the SPY. And those are the 3 that are keeping the whole thing afloat.
Exactly. So, the real question to me, too, is like, not only would you want to believe that when we have a bullish time period that you should, maybe consider using some leverage. I know people are crazy. But really the winners are the one who get the majority of the spoils, right? Like they're getting 90% of the gains in terms of market cap appreciation are going to those top handful of winners.
Yep. Yeah.
Wow.
I mean, it's pretty wild. I don't know what's going to happen. It seems like it's going to be short, but I am not going to put all my money in going short, right? So I've already done that before. I got my mistake for the year. Well, last year, I guess, technically. I am going to slowly, we did a video looking for deals, right? The financial market, really solid deals. I've started a position in Bank of America, Schwab. I'm buying more Google. We did a video on which tech stock is the best value. Surprisingly enough, Google is the winner right now. And if you look at the last 10-year gains, Google's far behind all Microsoft, Apple, Meta. It's pretty wild. So slowly scaling in seems like a good idea, but I don't think it's a great idea to be like, all right, I've had 60% cash, I'm going to go all in and just invest it now. It does not seem like a good idea until you break out of that channel.
Exactly. So like my recent thing has been my main account, sell cash secured put on something I want to own, right? And then my kind of shorter term trading account, I am definitely getting a little bit more bearishly positioned right now, particularly targeting things like Nvidia and Tesla that I personally think have elevated valuations. But I don't know.
For sure.
Broken clock, right?
Let us know, guys, what you think. And obviously, hindsight's 2020. That 100 moving average, it's not perfect, but it has a pretty solid record, 20 years on both ETFs. So have a good one.
At least a 9.5.